Good morning. We're glad you're with us this morning. Hopefully you had no problems getting here, considering Atlanta traffic can often cause headaches and just so many problems. We're delighted you're here with us this morning. We're going to dive right into the topic this morning before we have an exciting and hopefully insightful day as you are learning to expand your business or take that dream idea and make it a reality. Just to give our panelists more insight about you, I would like to ask for a show of hands so they can gauge their answers to our questions and our discussion and best help you as well. So a show of hands as to how many people out there already have businesses but are looking for financial support. A show of hands for how many people have already received financial support but need more. And then a show of hands to those individuals out there that are just dreaming big but they don't know how to make it happen. I would fall into that category. So a myriad of people here. We're going to dive right into the topics at hand. You've been introduced to our panelists briefly. We'll hear from the success story as well here. We actually have a couple of success stories because the gentleman to my left is working in lending but also is a former businessman as well. So I want to talk to David first. David's with Vantage South Bank. I want to first talk about the fact that people need money, as we've learned, but then how do you know when it's the right time to actually go approach the bank?
Well, I would say once they've exhausted their own personal resources, and if they can't finance the project or whatever their needs are at that time, obviously there would be a need to borrow the money. And I think the key there is to really have a defined set of project costs. So you understand what are the costs to whatever you need to do, whether it's to buy a building, buy equipment, purchase inventory, working capital. So you got to start with what are the total project costs, and then go back to look at what is your equity. How much equity do you have to bring to the table? You've heard the term having skin in the game. Well, all lenders are going to require that you have some equity into this project, and we want to see that you're vested as well as we are if we're going to consider lending you money.
Is there an ideal equation when you say having skin in the game? How much skin you need in the game?
Well, the typical, it could be 10 to 30% equity, depending on whether you're an existing business looking to buy real estate, or if you're a true startup, then you're going to be on the higher end of that scale, 20 to 30% equity. And equity can be defined as your savings, your retirement accounts, home equity, and if you've exhausted that, then you kind of go to the family, friends, private equity investors to raise equity. But deals start with equity. You got to have equity to go into a project.
So you're also talking about having your personal financial house in order as well. So I want to head down the panel now to Shimanda with Bank of America and ask you a little bit about that. How critical is it that you have your own high credit score and that you have your own finances really in order?
Absolutely. It's very critical. We want to make sure that, you want to ensure that you have leveraged your personal financials, that you're not deep in debt. We like to see that your personal debt is under 30% of your total household income. Sometimes that's difficult, but you definitely want to have that cushion there, that padding there, personal assets, so that when you come to us, we can see that your debt isn't highly leveraged. One other thing is, David also mentioned, after you've exhausted all of your personal assets, personally, we like to see that, you come to us before you exhaust all your personal assets and you've used your retirement or what have you, to see how we can help you get additional financing before you do that. Because again, we want to see that you have personal assets, liquid assets in the bank. So that's very important, that you have assets in the bank and you have not exhausted all of your personal credit.
So we've talked a little bit about having your personal financial house in order, but what about just getting the paperwork in order? I want to go to Tripper. He's with Georgia Commerce Bank. What documents do you need to be making available to a potential lender? Because first impressions are critical.
First impressions are very critical. The relationship's critical. And I always tell people that's the beginning of where you're going, always. And so in that beginning, I wouldn't say the paperwork has to come with you, but I would certainly start a relationship before you need the money. A bank joke is you're not a loan till you need a loan. And so if you could start that up early, and then the paperwork that will follow that will usually be tax returns, we'll do a lot of that personal financial statement, balance sheet, profit and loss statement. So depending on what you're looking to do and when you're looking to do it, that would be the bulk of it. And the important thing of that too is bring it all in. Don't bring half of it one time and half the next, because it will not get looked at and you won't be taken seriously. It shows us if you're acting that way on something so important, think what else you're doing out there that we don't know about. So that's also important, is to have everything together and to be ready, to discuss what those numbers mean. You don't want us to have to figure out what they mean. We want you to be able to tell us what they mean, and then we'll see if we agree with you what they mean.
Well, what exactly does that mean in terms of a timeline, though? You said you have to establish the relationship. What type of a timeline are we looking at?
Again, it depends on the timeline of your business. If your business has already been around, obviously your relationship there, I would hope, would be with who you're banking with now. And if you don't have a relationship with them or you don't like them, talk to some of your mentors out there, even your competition, on who they like to bank with, who has helped them. And usually you'll get some answers pretty quick. People, you want to hang around people, obviously, that want to see you succeed. Your banker certainly wants to see you to succeed. My competition, all of us want to see you succeed. So ask those questions at cocktail parties, at events you go to that are discussing financial opportunities. But they're out there, and people will want to see you succeed and help each other.
Terry Dennison's with the Small Business Administration, and the SBA serves a variety of roles, but the SBA can also help people to get organized when they are going to look for financial support. What can SBA do?
There's a couple things that we're able to do. First of all, we fund several resource partners that primarily work with either startup or existing businesses, and one of the things they can do is help them put together their business plan, vet the business idea, so make sure that we're starting with a sound business concept to begin with. If it's an existing business, be able to have a fair and accurate picture of what that business truly is financially in terms of their picture at that point. And then in terms of obtaining financing, help them put together the paperwork, review it, their financial projections, are they realistic? Are they based on sound assumptions? You know, you're not just pulling numbers out of the air.
What you just said there, are they realistic? You know, you have someone who has an idea, they're dreaming big. You go to the SBA, you go to the banks, they're going to be honest, and that honesty may not be what you want to hear. So if you do get all the documents in order, you have that elevator pitch, and someone still says no, then what? What do you do? What's the next step? And anybody can jump in.
Well, I can jump in on that one. First of all, it's important that if you are a business, ask to speak with a business banker, because that's what we specialize in. A lot of times, clients will go into the bank and they'll ask about business products or business loans without speaking to a business banker. So you first want to speak with someone who specializes in business. I'll say for Bank of America, we're able to guide you in the right direction. So when you come to us, we want to see where you are in your financial picture. If your business has just started, well, we have, just like Dean said, relationships with community development partners that we infuse cash into, and nonprofit organizations that we infuse cash into, where they can lend to you where we are not able to lend to you. So you may not be ready to come to us for traditional lending, but we can definitely guide you to our micro lenders or our nonprofit organizations who can assist you with startup capital. After that, once you've dealt with that company and you're able to transition back to us, then we will look at your financials and tell you exactly what we're looking for. We're looking for growth and profitability by the time you get to us.
Rob, we haven't heard from you just yet. Rob used to work in New York City, worked for corporate America, and then decided to go out on his own. I'm sure early on you've dealt with your fair share of no's.
Well, actually, I started out by saving my first year's salary in New York before I came down here. I came down to a really fertile economy. 95, 96, 97, Atlanta was booming. Was quickly able to put together 3 solid years of business records. But it didn't occur to me that I was really taking that much of a chance. I had a year's salary in the bank, and if I went through it, I was going to go back to New York and beg for my job back. And it didn't feel like I was taking that much of a chance. And little did I know over these last 19 years, the ups and downs of business and just how tenacious it is and how important your relationship with your lender is.
You also had a different experience with your lending. You mentioned this in the video we just played. You actually have a relationship with Tripper at the end of the stage right there, but you went toward a community bank when you were looking for support.
I did. I was with a bank, a larger lending institution that I really didn't have a relationship with. I think my banker shifted over 3 or 4 times through 3 or 4 different people. Didn't really get to know them at all. And one day I got a FedEx that said that they wanted to see my business records quarterly now instead of annually. And then called and was kind of surprised. And about 3 months later, someone said, come over to the bank, and they said they wanted to see my business records monthly. Well, to have a line of credit that's based on your monthly receivables is not really a relationship. And it's not conducive to being able to relax and run your business towards the future. I felt like I was trying to satisfy my bank before make prudent long-term decisions for my business. So someone told me about community banks. They came over, just like I said, and I told them my story. They listened to every word of it, and I said, here's what I'm looking to do. And right now, I don't want to have to show my business records every month. I don't want to have to show them every quarter. Once a year we get together, and you see my long-term track record. And they said, great. So that's where it started.
So there are different rules, different expectations. What are those differences that you may have if you're working with a larger financial institution? Let me ask that of Shamonda, since she's with Bank of America.
Okay. Well, first, let me comment on that. That's not normal. Us asking to see your financials every month. That was probably some extenuating circumstances, probably during the downturn of the economy.
Advertising agencies were going under. It was considered a high-risk business. So yeah, there was a lot of things.
And so, but generally, your question was, just how do you?
With dealing with a larger bank, and it's actually a two-part question, because how is the experience different if you're dealing with a larger financial institution? And then also, how is it different just with that one-on-one, that personal interaction? Because some people, that may actually be more important when they establish a relationship with someone.
So with the advantages you have with a larger institution is you have access to more solutions. So for example, I told you if we can't assist you with the traditional lending, we also have the nonprofit organizations that we can refer you to. Also, if you have assets, we also have asset-based lending departments where it doesn't matter about your credit, doesn't matter about how long you've been in business, we can assist you in that area. So we have more solutions, we have more conveniences, we have more innovative technology to help you with. It's just, with us, we just try to make sure that we bring the entire enterprise to our clients. Now, what is different about Bank of America now is that, just like Dean said, in 2011, we hired over 1,000 small business bankers in the community. So we are no longer in the banks. We are now out coming to visit our businesses, out getting to know our community. We are in the community, let you know that we're here. We are lending. I mean, again, we've committed to lending over $20 billion in addition, in the next 3 years, by the end of 2013. So we are in the community, we are lending, we want your business, and we are coming out to see you.
Is that still the environment right now? For several years now, since the recession, there have been endless news articles, endless interviews about the fact that banks do have cash, that there is money for investment, but they're looking for the right opportunities. Is that the case? The money's still very much available?
Well, there's certainly money available. And first, I wanted to just recognize Rob as a small business owner. And as an entrepreneur, I think he needs to be congratulated. You weathered the Great Recession. A lot of the people in the audience are business owners themselves. I just want to acknowledge how much I respect and admire a small business owner, for you're the ones out there taking the risks, and you're not sitting back and just collecting a paycheck. You're making it happen every day, and you deserve the respect and admiration for that. And you're employing the most jobs in the country, so I really admire what you're doing.
I wish my wife would say that.
Yeah, and with Rob, going back to the good times and the bad, you know, we concentrate on listening. And the kind of bank atmosphere I'm in is the listening. And with Rob and I, when you're saying, do you have the right banker? I think you'll know it, just like when we say, do we have the right customer? We'll know it when we become friends, literally friends. And when Rob can call me at night, or I can call Rob at night, and we can have a discussion where chances are good we're not going to agree, or chances are good there might be something where going through the tough times, Rob might have to call me and say, Tripp, here's what it's looking like. Or when my bank was going through some tough times, I called Rob and said, Rob, here's what things are looking like. And when you have that kind of relationship where you can talk openly and know each other's business, he knows about my bank very much. He knows who I report to. He knows if I'm sick, what's going to happen. If I leave and go to the competition, what might happen. So that is just crucial in the relationship as far as the money's out there, guys. I can assure you that. It's what's the best interest for you and making the product work correctly for you. And that's when if you have a good banker, like Shamanda said, you know, if I can't help you, we will call someone like her and say, hey, here's who you need to go talk to. They have more products or hands-on products that we don't offer. And that's where a good banker will step in.
There were a few times that Tripper came over and said, hey, look, you're going to read about this in the news. You're going to see that banks are changing names. Banks are going under. Here's our situation. I never had to read it in a news article. I knew what his expectations for me were, that I was still in good hands. And I think the name might have changed 2 or 3 times, but I've stuck with Tripper and the principles of that bank because they've always been there for me.
So Tripper and Rob clearly have a wonderful rapport, a bromance going on here as well.
Sorry
We
about
started
that.
dating.
An ideal
Sorry.
relationship. So if you don't have that, when do you know if it's time to go find it? Like, can you be having conversations with multiple lending institutions and heading down the right path?
I think you can. I think you'll know it literally if you can't call them your friend. If you can't pick the phone up and get a phone call back. You may not always be able to talk to your banker, but know that you'll get a phone call back by the next meal. That's always my promise to a customer. If I haven't called you back by the next meal, something's wrong. I'm either stuck in a meeting, I'm doing something like this, and I can't call back. But by that nighttime, be it 8 o'clock at night, you will hear from me saying, hey, I'll call you first thing back in the morning. And when you don't have that, when times are good, you don't care. It's like a lawyer or CPA. You don't care. You don't think about it. When times get bad, you want that number, and you want to say, hey, can I get in touch with that person? Will they listen to me? Will they throw out ideas or be able to direct me to the place to go, to some of my competitors or to some people in the same line of work that could give me guidance? And I think that's what it's all about, going back to that relationship. And then one thing we stress is our customers tend to know other customers that we bank. We have open houses. And it helps them out just because they get ideas from other business owners.
I think I looked for a new bank because I thought I was going to have to make short-sighted decisions. So I said, it's time.
Terry, I want to bring you into the conversation because you spoke earlier about what SBA can do for you, but there's also a financial component to the organization.
Yes, basically, there's a couple things we do. Primarily in terms of access to capital, we are the guarantor of commercial loans made by private commercial lenders. That guarantee basically says if the loan defaults for some reason, if the lender has done everything they need to do from closing and administering the loan perspective, then we will reimburse that lender a agreed upon percentage of the outstanding balance. That does a couple things. One, it mitigates risk. It lowers the lender's exposure so that hopefully you'll get a yes versus a no. It also maybe allows that lender to provide the loan on better terms than they would have under their conventional lending box. We also have for smaller businesses, home-based businesses, solopreneurs, our microloan program. And I think Bank of America actually supports some of our micro lenders here in the area. We have 3 that serve Metro Atlanta and 5 that serve overall in the state of Georgia.
The panel that follows our panel is about startups. Atlanta has a robust, a dynamic, high-tech startup environment. So often in that discipline, you'll have people business dreamers, entrepreneurs going to families. So you have angel investors or venture capital. How is that different than traditional lending? And is there an environment for high-tech startups to receive funding from traditional lenders? And anybody can jump in on that.
Well, I know with us, we need the 2 years of financials. But again, we refer that business out to our nonprofit organizations, our community development partners. And I do know that what they look for is collateral. So you definitely have to have collateral. They're normally dollar for dollar collateral solutions. It's largely because you won't have business credit per se because you are a startup. So it's largely based on your personal credit and your personal ability to pay back. Again, we don't underwrite it, we refer it out, but your personal credit is very so. Credit history, character, those 5 C's of credit, collateral, and having the capacity to pay back, show them that you can pay back your credit requests. But personal credit is very important, and your capacity to pay them back and collateral.
Rob, a moment ago you talked about how back in 94, 95, 96, you had some really early on success with your personal business. You have weathered some interesting times in the economy, certainly over the last 5 years. With the current environment for people in this room who are starting businesses or dreaming of starting businesses, what are the challenges, what are the pros and what are the cons right now?
I would say that the pros, I think as a business owner, you really have to have a mental toughness, a resiliency that you're not going to quit, and that might be counter to me saying I'd go back to New York, but the conviction that you're going to stay through it. So that's number one. There's going to be bad days. There's going to be times you look ahead and say the next 6 months are going to be really tough, but step by step I can do this. I can get out of it. That belief and that resiliency. But one thing that I've been very fortunate through this economy is I've stayed, in as far as advertising agencies go, diversified. I haven't been overinvested in one vertical. I've represent sports teams, entertainment networks, utility companies. I think a lot of times, a lot of people said you should niche and you should do just this or just that or just this. And sometimes you don't know what the economy is going to do, the effect that it had on the auto industry, the banking industry, and how that could affect your business. So I think mental toughness and being diversified, just like with a stock portfolio, your customers should be in a number of different industries that if one of them tanked, your business doesn't tank along with it.
David, I want to ask you the same question since you've been on both sides of it, working as a lender with Vantage South Bank most recently and as a business owner yourself. So looking at the last 5 years, looking at the environment in 2013, what are the challenges? What are the ways to excel now?
Well, I think the key to being successful is having proper capitalization, making sure you've got enough operating capital for your business. The success and failure is cash flow. It's what your business lives by. So when we look to structure a financing package for a small business owner, we want to make sure that the financing that we structure is going to enable them to be successful. We're going to be their financial partner, and we want them to succeed. So we make sure there's adequate working capital, we do all of we're an SBA specialist. That's basically all we do. We're a preferred SBA lender nationwide, and we partner with SBA to guarantee our loans. But the benefit of that program, and to me, it's the best government program, in the United States, is through the Small Business Administration. It allows us to get more aggressive as a lender because we are getting a guarantee from the federal government, so we can mitigate some of the risks to the deal, where there's a collateral shortfall or whatever the challenge may be. We can still make an aggressive financing package to meet the needs of that small business owner. But operating capital is key.
We're going to wrap up this portion in a moment, but I want to go down the panel and ask one question about success. What is it that you see in the entrepreneur that walks into your office asking for financial support or walks into your office asking for help with organizing and strategizing, or the person that walks into your office, Rob, and says, you know what, I want to be just like you and start a company like you. So what advice do you have? I want to start with David. What is the key to success, aside from having a great idea?
Well, I think the magic question is when a lender asks you, why should I make you a loan, you have to be able to demonstrate to them how you can pay it back. So that's the repayment ability is the most important thing that you've got to be able to demonstrate to your lender. Here's how I'm going to pay it back, and walk them through whether it's I did it the last 3 years. Here's my financials, or I project to do this going forward with solid assumptions. But you've got to be able to repay the loan, and that's really what we're looking for. How are you going to pay this loan back?
Yeah, pretty much same thing here. The ability to pay us back. Make sure that you diversify. Make sure that you have a continuation plan for if there's an extenuating circumstance or a lifetime event. Make sure that you have a continuation plan, because we want to see that if we loan you money, that you have a backup plan. So being able to pay us back, diversifying your business, not having all your eggs in one basket, and having a continuation plan if something happens to your business.
I think also, again, taking the approach from a smaller bank side is you make the argument of why we wouldn't want to be with you. Making the approach, hey guys, you're idiots not wanting to bank me. And again, those are the customers we love, because when you succeed, we succeed. And then hopefully you tell your buddies out there saying, hey, you want to go see this bank. They listen. And that's why someone like a Rob is so important to me, and why you hear about that. I'm at his office all the time. Not as much now probably as the early days, but because I need him more than he needs me. And if you're a customer where I need you more than you need me, you can bet you're going to get the service, you're going to get the answers you need, want, and we're both going to be in a win-win situation.
Terry?
And I would say, in addition to everything that has been said already, one of the great lessons out of the Great Recession is that I think businesses and business owners need to constantly revisit their business model to make sure it's the best it can be. Because I think what happened in a lot of cases, they had a good business model, but it didn't innovate. It didn't keep up with what was going on in the bigger economy. And then by the time the recession came, they had really lost their competitive advantage and couldn't continue. So continue to innovate. Just because it's good now doesn't mean it's going to be the best it could be going forward.
Rob?
I think, David said I went through a recession. I went through 3 recessions, all very, very different. And I think what was just said about being really honest with yourself with the what-if scenarios and being prepared for those what-if scenarios and being able to go through those what-if scenarios sometimes with a demeanor that doesn't affect anyone else in the company. So I know I'm in a what-if scenario right now. I can't carry that around with me. I have to stay positive. There's no one to make excuses to. Just get up and do it. But be prepared. And there were a few times that I was into that what-if scenario. It happened, and you hang on and be confident and
don't quit.
Don't quit.
You keep paddling, your banker will keep paddling. I promise you that. Just don't quit paddling.
Stay in touch with your banker.
It's funny that we're talking about paddling in Georgia. I think of Deliverance. We just had our 40th anniversary of the film. A great insight and wisdom from our 5 panelists.